I have access to my QuickBooks, but I don't even know where to run the reports. And this is such an important thing to look at your margins, because you have to determine if you're profitable even before you get to anything else. But again, at the end of the day, if you are not looking at your financials, you literally have a glorified hobby, because if you're not focused on how do I make the most money to meet my goals, then what are we doing? Gross margin is simply that revenue minus the expenses directly attributable to creating that revenue. It's not the right mindset to have, because you can be losing money very quickly in your business and to shut the doors pretty quickly. And
I just want to say thank you to all the members of our community of the New Jersey Business Podcast. Thank you for the likes, the shares. Thank you for supporting this movement. I'm so happy to bring to you today the unconventional CFO, Lauren Furtado. She's doing a 3-part series, and it's so important. If you're a business owner, entrepreneur, and you are perhaps concerned about your finances, if you're not happy with your current accountant, if you don't know where to start to get your books in order, you're going to get a ton of value from this series. Make sure you watch every single episode of it. What's shaking, New Jersey? Here we are for part 2 of this 3-part series with Lauren Furtado, the unconventional CFO. She's brought so much value so far, and I can't wait to hear what you're going to be sharing with us today. Lauren, will you please share with our community, in case they missed that first part, what is it that they missed?
Yeah, absolutely. So we spent some time talking about the misconceptions about different types of accountants. So everyone's kind of clear on, as a business owner, who are the key players, and we're talking accounting and finance. And then we got into some really practical tips for early stage entrepreneurs. So really walking through what is the foundation that I need to set as I am building my business.
Awesome. And today we're going to go into the critical 4.
Yes, we're going to get educational today. It's going to get exciting.
That's awesome. I look forward to it. And so go ahead, share with us, what are the critical 4? What is it? Tell me about it.
Yeah. So in the last episode, we talked a little bit about monitoring your finances as it relates to reviewing your bookkeeping. So after you do your bookkeeping at month end, now I'm just going to play out the scenario that I'm using QuickBooks. I have the ability now to generate financial statements. I know, don't get scared, everyone. It's going to be okay. So the financial statements, I will say there are critically 4 metrics that you need to focus on as a business owner at a minimum. And listen, every industry can be unique. There can be other things you may need to look at, but every industry, every business owner should really be looking at these 4 things. The first 3 are going to be on your income statement. So when we talked financial statements, there are different statements on your income statement, which people also refer to as your P&L, are these 3 things. First is revenue, no brainer, right? Where am I bringing in income? Where I focus with my clients, a lot of the discussion is evaluating your pricing. It's evaluating your lead generation. It's evaluating, do I have opportunities to bring in recurring revenue? So really evaluating that revenue group. Second is gross margin. Gross margin is simply that revenue minus the expenses directly attributable to creating that revenue, right? So depending on your business, this can be very simple. Let's say I'm a service-based business. It is typically just labor, right? The person that is working on it. And when you get more complicated and you've got inventory, let's say I'm a retail company and I'm selling t-shirts, right? It's the t-shirts that I bought and it's the printing that I need to do on them. It's the shipping costs that I incur when I'm sending it to customers. And this is such an important thing to look at your margins, because you have to determine if you're profitable even before you get to anything else. Have I priced at a point that is at least covering how much it costs me to do it, right? That's number 2. Number 3 is what we call the net margin, where we just talked gross margin. This is now net margin, thinking a little further down your P&L. We now are going to incorporate things like rent. So let's take the t-shirt. Maybe I have a brick and mortar store, right? So employees. I've got salespeople that I now have to pay. I have marketing expense. So there are other operating costs that should be evaluated, again, to determine your bottom line. That is all even just before tax, right? So again, evaluating what your margins look like from a net perspective will help you relook at, is my price high enough? Is it set at a level that it needs to be in order for me to still be profitable, right? So those are the 3 key metrics. I save the best for last in the 4 because cash is king, as we all know, right? I'm going to spend a little bit of time talking about cash flow. So cash flow, and we use cash flow generally, but it is a projection of what my cash balance is at any point in time. I don't know how many people, and I was guilty of it too. I look at my bank account balance on my app or online and I say, oh, I've got enough money to take my family on vacation, right? Like I should be fine. But I didn't think about the fact that I have an annual insurance payment due next week, right? So it's evaluating what you're spending and what your inflows, your revenue looks like, because ultimately you do have certain businesses that's not just, hey, I sold this and I got the cash right away. You have an accounts receivable. You've done the transaction, but you have to still collect it from customers. So being able to look at that over a specific time period is so helpful because you can determine, okay, I've got cash coming in now. I can pay my employees then. I've got these things due at this point in time. It's not, I think last episode I mentioned this concept as well. It's not complicated. It is simple, but it's not easy, right? So being able to build out that cash flow and what is it telling me? How do I build it? What are the inputs that I put in here, right? Like where do I start can be overwhelming sometimes, I think, for people.
Thank you very much for sharing those critical 4s. Laura, I have actually quite a few questions for you because oftentimes when I talk to entrepreneurs, I find it a little scary, but they don't know their numbers. So if you, like they might know their revenue, but they rarely know their net profit. And oftentimes what they would say is like, I don't know, my bookkeeper knows kind of thing, which I think it's concerning, isn't it?
Absolutely. It's not the right mindset to have because you can be losing money very quickly in your business and need to shut the doors pretty quickly. Unfortunately, I read a statistic the other day that talked about if you've got 2 months at a loss, you're like in a really bad spot, right? So depending on how much cash reserve you have, you can end up out of business quickly if you're not focused on profit first, to be totally honest, right? You can't make these decisions in terms of your operating costs and not understand what the impact is on your financials because you are going to run out of money really quickly.
I'm also curious to have your take on net profit. I know that the AIM percentage of net profit varies depending on industry. And I guess the average also varies because you have people who are doing great at it, people who suck at it, right? What would you say, and based on the industries that perhaps you work the most with, whether it is service industry or other industries, it's a good net profit percentage to aim for?
Yeah. So I think, like you said, it is highly dependent, right? On the industry, it is highly dependent on even the business owner, right? So one of the things we do is we benchmark for my regular recurring clients against industry. And then it's, okay, well, we're not there, but why, right? And are we okay with that, right? What target do we want to be at? Do you want to be at something higher? Well, let's talk about cost cutting or raising prices. You have to be careful, right? Because you may want to raise your prices, but if competitors aren't, right? Are you truly going to be able to bring in new customers? Are people going to leave because you're trying to raise prices? So you have to be mindful of what happens in the industry when you're making decisions on what you want that to be. I'll give another example. You might be fine with it being lower. And I say that in the context of I have business owners, and to be honest, me personally, where I don't want to work like an 80-hour week. So I would rather hire someone that's going to cost me a little bit more to outsource some things, right? To be able to spend less time in my business. Yes, my margins are going to suffer a little bit, but it's still within a tolerance that I can handle. because I personally value the time I'm spending with my kids versus me executing on work that I can get done, right? But at what cost?
Right. And if I was to ask you for percentages, what ranges can you give me? What would you say is like, listen, if you're in this percentage range, you need to work on it. If you're in this range, you're doing good.
Yeah, so typically I serve blue collar businesses, which are ambiguous for lower margins. So to be honest, 10 to 15% actually isn't terrible, right? Whereas a purely service-based business, you might have 30% margins, right? So again, it's going to be very dependent, but again, an easy Google search, to be honest. Yes, I bring actual data and like,
Based on,
metrics and things into our dashboards that we review with our clients, but it's not hard to find out kind of what the typical range is. It also may depend where you operate too, right? Here we are in New Jersey. The cost of everything feels like it's astronomical, right? So like also just some awareness as to regional kind of impact on it as well.
So another question that I have is, and I guess this kind of goes into bookkeeping a little, accrual system versus cash system. If you could quickly just break down what they are and maybe your take on pros and cons. And I'll share in advance that I always been coached by a business coach. Now, a business coach is different than someone who has knowledge of the accounting aspect.
Yep.
That it is better to go on a cash basis. But generally, accounting professionals want to go on an accrual basis. And I have a hard time understanding why.
Yeah. So I will give you, I prefer the opposite, and you're correct, accrual. And again, it really depends on your business. But again, for me, most of my client base operate in blue collar businesses. So we're talking equipment, things I want to depreciate over time, right? Fixed assets. I have inventory on hand. I have payables that may be more long-term, right? I have, just certain accounts that make way more sense, because what you want to do on your financials is this concept of matching, right? Where your revenues and your expenses happen at the same time that are pretty much aligned with like when things happen, right? So like I incurred the expense for this piece of equipment in the same period I brought in the revenue related to the job I did for this, right? So I think it's understanding that if cash is what you're using, does that follow the flow of how your revenue comes in, if that makes sense?
So for the purpose of projections, would a cash system be more accurate and help with projections, or would an accrual system?
It doesn't really matter, to be honest, right? Because what we're going to do in a cash flow projection is when it ultimately is going to be more cash basis, but you have to look at, because your income statement, that's why the cash flow is important. Your income statement, let's just take the insurance example. So in accrual accounting, I may pay my insurance on the 1st of January for the whole year. Right. But what I would do on your P&L is recognize that over the 12-month period ratably. So I would have, let's say, $1,000 each month that gets expensed, but the cash went out the door on January 1st, right? So I don't see that on my P&L. I see $1,000 of expense for the month of January only.
Right.
Whereas when I do a cash flow projection, I can say, okay, I know this is due then, right? So cash is going out the door on January 1st for insurance.
Right. That makes total sense.
But the benefit of it, which is why you do accrual, is like, well, it does relate to the whole year, right? And technically, if I wanted to, I don't know, stop my insurance, like I would get a refund for the amount that I didn't ultimately incur, right? So like the coverage period is, and the benefit you get from it is the full year.
Yeah, and that makes a lot of sense. Thank you so much for clearing that up. So regarding the critical four, perhaps one question that comes to mind is, why do you think for a business owner, entrepreneur, getting a handle on that is such a mental block? I know we talked about mental hurdles before, and we talked about transparency, but where do you think that mental block stems from?
I think it's the lack of understanding. It's not knowing actually how to look at your financial statements. So, okay, I have access to my QuickBooks, but like, I don't even know where to run the reports. Where do I find the numbers? Something as simple as that, right? Like, how do I practically look at this information? I think the biggest thing though is accountability. And it's, if I don't have the discipline, because I hate looking at the numbers, I'm going to avoid it. I'm not going to look at it regularly, but like, again, at the end of the day, if you are not looking at your financials, like you literally have a glorified hobby, because if you're not focused on how do I make the most money to meet my goals, then what are we doing, right? So it's, you have to kind of face the demon and then figure out for you how to create that accountability. And Paul, maybe for someone like you, that's literally just putting half an hour every Thursday on your calendar and you're going to do it. For other people, that doesn't always exist. And where I find that the most, I offer one service that's kind of a one-time, no commitment, come in, do like a deep dive on your financials, give you action items. Those people come back and say, actually, Lauren, can we sign up for the monthly? Because they need me to ask them, did you do the 3 things we talked about last month? And making sure that they've got somebody in their corner that's encouraging them to get to their goals. Sometimes the accountability has to come from an external source.
I really appreciate that. You dropped so much knowledge again. Thank you so much for that. I know that you have a bonus, some resources available for our community. Can you please tell them what that is?
Yeah, absolutely. So the cash flow forecast that I mentioned, I have a free template on my website. You can download it. It's a Google Sheet. It is easy, I promise. And there's a supplemental training. So I've got a video there as well explaining like, here's where you start, input this information, and then go here to build it out. So I hope that you guys go on and download it and use it and build out your cash flow and can understand where your money's going.
There you have it, folks. We'll make sure to have that link on the show notes. And do not miss the next part, the third part of this 3-part series with Lauren. And if you missed the first one, go and watch it right now.
Hey, appreciate you listening to this episode of our 3-part series. If you are looking to work with a fractional CFO and you're a blue collar business who's making anywhere from $2 to $10 million in revenue, reach out to me. There's a form on my website. I really think I can add some value to growth-minded blue collar businesses.
A big thank you to our show sponsor, Keep My Office Clean. Thank you so much for supporting this movement. And also a shout out to NMAS Co-working, located in Morristown, for allowing us to use this beautiful space. Thank you so much. We really appreciate the support.